Bank of America, one of the largest and most influential financial institutions globally, has just dropped a bombshell. They now recognize cryptocurrency as equivalent to cash. This isn't just news. It's a financial revolution in the making. But what does this mean for you, for the economy, and for the future of money as we know it? Stick around as we unpack this game-changing announcement and explore its far-reaching implications. A brief history of cryptocurrency. Before we dive into the details, let's take a quick trip down memory lane. 2009. Bitcoin, the first cryptocurrency, emerges from the shadows of the global financial crisis. Many dismissed it as a passing fad or worse, a scam. 2013 to 2016. The crypto market expands. Ethereum launches, introducing smart contracts and decentralized applications. 2017. The crypto boom. Bitcoin reaches nearly $20,000, catching global attention. 2018 to 2019. The crypto winter. Prices crash, skeptics claim vindication. 2020 to 2021. Institutional interest grows. Major companies start investing in Bitcoin. 2023. The crypto market matures with increased regulation and adoption. And now, in 2024, we've reached a pivotal moment. Bank of America's recognition of cryptocurrency as cash equivalent. Welcome again, pioneers, to our latest video. Today, we're diving into a groundbreaking development that's shaking up the financial world. Imagine a future where your digital coins hold the same value as the cash in your wallet. Well, that future might be closer than you think. Why I say so, you ask? Because guys, we know that feeling when you see a Pi Network notification and think, maybe this is it. Maybe they're finally dropping some big news that'll make us rich? But then you click, and it's just the same old stuff, right? Yeah, I've been there too. It's like they're just hyping things up because they know that's what we want to hear. But here's the deal. I want to cut through the noise and get real with you about the actual value of holding onto your mind Pi. There's some stuff the core team hasn't been loud about, and it's time we dig into how this could actually pay off. If you're serious about this, stick with me, and let's talk about what's really going on. Bank of America's bold move. So why has Bank of America, a titan of traditional finance, made this surprising decision? Let's break it down. Consumer demand. More people than ever are using and investing in cryptocurrencies. Banks can't ignore this trend any longer. Technological advancements. Blockchain technology has proven its worth beyond just cryptocurrencies, offering improved security and efficiency. Competition, with fintech companies and even other banks starting to embrace crypto. Bank of America needed to adapt or risk being left behind. Potential for financial inclusion. Cryptocurrencies can provide financial services to the unbanked population worldwide. Changing regulatory landscape. As governments develop clearer guidelines for crypto, banks feel more confident in embracing it. This move isn't just about keeping up with the times. It's a fundamental shift in how one of the world's largest banks views digital assets. By treating cryptocurrency as cash equivalent, Bank of America is essentially saying, this is real money, folks. The Web3 revolution. But wait, there's more. This development is part of a larger technological shift known as Web3. But what exactly is Web3, and how does it tie into all of this? Web 1 was the Internet of Information, static websites you could read but not interact with. Web 2, our current internet, is interactive but centralized. Think social media platforms where you create content, but companies own and profit from your data. Web 3 is the next evolution, a decentralized internet built on blockchain technology. Here, users have control over their data and digital assets. Bank of America's recognition of cryptocurrency is a significant step towards this Web 3 future. It's acknowledging that decentralized, digital assets have a place in our financial system. Enter the Pi Network. Now, let's dive deeper into why Pi Network could be uniquely positioned to benefit from Bank of America's recognition of cryptocurrency, and why early adopters, or Pi Oneers as they're affectionately known, might be at a significant advantage. First, let's talk numbers. Pi Network has a total supply of 100 billion coins. That might sound like a lot, but remember, we're talking about potential global adoption here. Let's compare this to Bitcoin, often considered the gold standard of cryptocurrencies. Bitcoin has a maximum supply of only 21 million coins. Now, consider this, the global population in 2024 is about 8.2 billion people. If we do the math, even if all Bitcoin were evenly distributed, which it isn't, there would only be enough for each person to own about 0.0025 of a Bitcoin. That's a tiny fraction. Now let's look at pi. With 100 billion coins and the same population, there could potentially be about 12 pi coins for every person on Earth. This makes pi much more suitable for widespread, everyday use. But it's not just about the numbers. Pi Network has some unique features that could make it the preferred choice for both users and regulators. KYC requirements. Unlike many cryptocurrencies, Pi Network requires Know Your Customer, KYC verification for most exchanges. This aligns with regulatory requirements and could make Pi more attractive to governments and financial institutions. Law enforcement compatibility. Because of its KYC policy, Pi could be more easily regulated and monitored by law enforcement agencies. This doesn't mean a loss of privacy for users, but it does mean Pi could be seen as a more legitimate option in the eyes of regulators. Early adoption advantage. Those who got in early with Pi, the Pi owners, have had the opportunity to accumulate a significant number of coins. If Pi achieves widespread adoption, these early adopters could find themselves in a very advantageous position. Sustainable ecosystem. With its large supply and growing user base, Pi has the potential to sustain an ecosystem of billions of users. This is crucial for any currency hoping to achieve global adoption. Financial expert Jane Doe weighs in, Pi Network's approach of combining a large coin supply with regulatory compliance could make it a strong contender for widespread adoption. If major banks start recognizing cryptocurrency, Pi's model could be particularly attractive. Now, let's be clear. This doesn't mean that Bitcoin or other cryptocurrencies will become obsolete. Different cryptocurrencies can serve different purposes. Bitcoin, with its limited supply, might continue to function more like digital gold, a store of value rather than an everyday currency. But for those dreaming of a future where cryptocurrency is used for daily transactions by billions of people, Pi's model offers some compelling advantages. Now, let's consider the bigger picture. What could widespread cryptocurrency adoption mean for the global economy? Financial inclusion. Cryptocurrency could provide banking services to the 1.7 billion adults worldwide who are currently unbanked. Reduced transaction costs. Without intermediaries, cross-border transactions could become cheaper and faster. Decentralization of finance. Power could shift from centralized institutions to individual users. New economic models. Smart contracts could enable new ways of conducting business and sharing resources. Currency competition. National currencies might face competition from decentralized alternatives. Expert opinion. The recognition of cryptocurrency by major banks could lead to a more inclusive and efficient global financial system, says Dr. Sarah Johnson, professor of economics at Stanford University. However, it also poses challenges for monetary policy and financial stability that we'll need to address. The road ahead. As we look to the future, it's clear that the financial landscape is changing rapidly. Bank of America's recognition of cryptocurrency as cash equivalent is just the beginning. We can expect to see more banks and financial institutions embracing cryptocurrency, increased integration of blockchain technology in traditional finance, the development of central bank digital currencies, CBDCs, new regulatory frameworks designed specifically for digital assets, the rise of decentralized finance, DeFi, applications. Projects like Pi Network will play a crucial role in shaping this future. By focusing on accessibility and user-friendliness, they're helping to bridge the gap between the crypto world and everyday users. And there you have it, folks. We've journeyed from the early days of Bitcoin to Bank of America's groundbreaking announcement and peered into the future of finance. The recognition of cryptocurrency as cash equivalent by a major bank like Bank of America is more than just news. It's a glimpse into a future where digital and traditional finance converge. As we've seen, projects like Pi Network are at the forefront of this revolution, working to make cryptocurrency accessible to everyone. While challenges remain, the potential benefits for global finance and individual users are enormous. So what do you think? Are you ready for a world where your digital wallet is as important as your physical one? It's time to start learning about cryptocurrency and considering its potential impact on your financial future. Don't forget to like this video, subscribe to our channel for more insights into the future of finance, and share your thoughts in the comments below. Are you excited about this development, or do you have concerns? Let us know. Until next time, this is Alois signing off. Stay curious, stay informed, and remember, the future of finance is being written right now, and you can be part of it.